welcome back to the Deep Dive. I'm excited for today's topic. We're going to be diving into something that might not sound the most exciting at first glance.
Uh-huh.
But stick with us.
Yeah.
We're talking about life insurance.
Yes.
Specifically, this book, Live Your Life Insurance.
Right.
And it's really all about how you can use life insurance and whole life policies in particular to take control of your finances and potentially build more wealth.
Okay. Yeah.
So we're talking about stuff that's going to impact you right here in Deer Park, LaPorte, Pasadena.
Absolutely.
And one of the things I thought was so cool about this book is how it reframes life insurance. You know, it's not just about that, like,
the carry.
Yeah, the doom and gloom, right?
What if?
Exactly. It's like, what if I die? But this is really more about how can you use a whole life policy while you're alive and well as a financial tool.
Yeah. It's about living your life insurance.
Living your life insurance, exactly. And even the Amazon reviewers are raving about the practical advice in this book. And we'll be pulling insights from folks like Tom Wheelwright, you know him, author of Tax-Free Wealth, Ken Trainers, all these people who are like...
Yeah, really know their stuff.
Really know their stuff. And we're going to be diving into that to see how you can apply it to your own life.
Yeah. You know, a lot of times people think life insurance is only for rich people or people with huge families they have to protect.
Right.
But Live Your Life Insurance says that's not true.
Yeah, it debunks those myths right away.
It does.
And says even if you're a modest earner, you can still benefit from that.
Yeah, and they give you real-world examples.
Yes.
Not just theory.
Exactly.
So this is how real people are doing it.
And so we're going to unpack all that for you. But before we jump in, I think it's important to kind of distinguish between whole life insurance and term insurance.
Right.
Because those are the two biggies that you always hear about. So what are those core differences?
Okay, so term life insurance is kind of like renting an apartment.
Okay.
You're getting coverage for a certain amount of time, like 10 years, 20 years, whatever it is.
Set period of time.
Exactly.
Okay.
Whole life insurance is more like owning a home.
Okay.
It's lifelong coverage. And you're building up that cash value over time, like equity.
Like equity in a house.
Exactly.
Okay.
And that's what makes it so powerful and unique, especially if you're thinking about long-term building wealth.
So it's not just about like when I die, then my family's taken care of.
No, it's not.
It's like while I'm alive, I could use this as like a savings and investment tool.
That's right. You have control.
Like having your own little private bank.
That's a great way to put it. The book calls it the CLUE method.
Okay, the CLU method.
Control, liquidity, use, equity. And it's really all about leveraging those four things to build your own financial future.
The CLUE method.
Right.
Control, liquidity, use, equity. All right, I like it. It's catchy. But let's break that down because I need you to help me understand this a little bit better.
Of course.
So control, what does that actually mean?
It means you are in control of your money. So unlike your 401k, you know, or an IRA where that money's locked up until you're like 60, you decide when you can access that money.
Okay.
No restrictions.
So that's a big deal, right? Like if some unexpected opportunity comes up.
Exactly.
Or maybe you hit a rough patch. And you need access to some cash fast. You're not stuck.
You're not stuck waiting.
You have options.
That's right.
Okay, so that makes sense. And then liquidity, what does that mean in this context?
That means that money is available when you need it.
Okay.
You would withdraw it, you can borrow against it.
And that gives you a lot of flexibility.
A ton of flexibility. You're not going to find that anywhere else.
Yeah, it sounds like that CLUE method could be a real game changer, especially for people right here in our community who are looking to build that solid financial future. So we've got control, liquidity. Let's talk about the use part. What are some ways that people are actually using this cash value?
So this book has a lot of great examples that we'll get into more later. But think about it like this. You can use it for a down payment on a house.
Wow.
You can use it to fund your business, unexpected medical bills, anything you need.
Oh, that's incredible.
And you can even supplement your retirement income with it.
It's like having that safety net, but it's also like
a springboard.
A springboard, yeah. For like reaching your goals and dreams. And I think that's what's so cool about this. It's really empowering.
Absolutely.
Especially for folks right here.
It is.
In our area. All right. So control, liquidity, use. No, we got to talk about equity. What is equity?
Okay. So just like your house appreciates in value over time. Your cash value does too.
Okay.
So, and just like you can get a loan against the equity in your home. You can borrow against your cash value.
Okay.
But it keeps growing.
So it's like, it's the best of both worlds in a way.
Exactly. It's like having your cake and eating it too.
Wow. So we have control, liquidity, use equity.
Yeah.
That is a pretty powerful combination.
And that's the power of the CLUE method.
Okay, I'm starting to get it.
Good.
Now I need you to really break it down for me. You said this book walks us through like the 5 phases of a whole life policy.
It does.
And it uses these real life stories
Absolutely.
to illustrate these concepts in action.
Yeah.
So let's get into that. Let's start unpacking those 5 phases.
Let's do it. So the book breaks it down into like 5 distinct phases of a whole life policy, and it uses real life stories to illustrate those.
Okay.
But it's not just theory.
Yeah.
You see how these things play out.
Okay, cool.
So it starts with phase 1, the startup phase. This is when you first get your policy.
Okay.
And you're starting to pay your premiums.
So you're kind of like, you're planting a seed, right? You're like nurturing it.
Yeah.
But you're not seeing the results yet. It's going to take a while to grow.
Right. It takes time.
Okay.
It's a long-term game.
That makes sense. And the book talks about this couple, Ben and Bernie.
Yes.
Who faced a lot of skepticism when they first got their whole life policy.
Yeah, their family and friends were like,
yeah, they were like, what are you doing?
Are you crazy?
Exactly. And it'd be so easy to just give up, right?
Right.
When everybody's doubting you.
Yeah, but they stuck with it.
They stuck to their guns.
And it paid off for them.
Yeah, because they had that long-term vision, right?
Right.
They weren't just looking for that quick return.
Exactly. They knew wealth takes time.
Takes time.
And thinking outside the box.
Can't get outside the box.
Yeah.
So what happens after that startup phase? Let's say you've been diligently paying your premiums. You're starting to build that cash value. Now what?
So we move on to phase 2, the leverage and investment capability phase.
Ooh.
That's where it gets fun. Now you have this pool of money that you control, and that's when the possibilities start to open up.
Okay, so the CLUE method really starts to come into play here.
Right. You can use that cash value for all sorts of things.
Like what?
The book gives an example of this couple, Kelly and Katie, who used their cash value to buy a car.
Okay.
And then, unfortunately, Kelly lost his job.
Oh, no.
But they were so grateful they had done that.
Because they didn't have a car payment.
Exactly.
Hanging over their heads.
No car payments.
So that's a perfect example of how, like, having that liquid cash available can just give you
peace of mind.
Peace of mind.
Safety net.
And the freedom to kind of like navigate those tough times.
Absolutely.
That makes a lot of sense. What are some other ways that people are using their cash value?
So the book also talks about this couple, Sam and Sarah, who moved a lot for work.
Okay.
And they didn't have a traditional retirement plan.
Right, because they kept switching jobs.
Exactly.
Okay.
So they use their whole life policies as their own retirement fund.
That's smart.
It gave them portability and control.
Especially, I mean, right here in our area.
Yeah.
People switch jobs all the time.
That's right.
And it's important to be able to, you know,
take that with you.
Take it with you. Have that control over your own money.
It's about having options.
Options, exactly.
And the book also talks about people who are using their cash value to start businesses, invest in real estate.
Oh, wow. So it's not just about like protecting yourself from the downside.
It's about creating.
It's about, taking control of your finances and like.
Yeah, being proactive.
Creating opportunities for yourself and for your family.
Building your own future.
Okay, I'm digging it. So we've got the startup phase. We've got the leverage phase. What's next?
Phase 3, that's the spending other assets phase.
Spending other assets. Okay.
So now you're starting to think about retirement.
Right.
How are you going to maximize your resources?
Okay. And the book advocates for this strategic approach to like spending down your assets.
Right.
Okay.
And using your life insurance policy as a foundation.
So it's like you've been saving all this money and now it's like, how do I actually use it?
Exactly. How do you actually live that life you want?
Make it work for you.
Right.
And the book uses this really interesting illustration. It compares two couples, the prosperity couple and the poverty couple.
They start with the same amount of assets.
But they have two very different outcomes.
Right. The prosperity couple uses this strategic spend down approach.
Oh.
They leverage their whole life policies.
Okay.
So they're not afraid to enjoy their money.
They know they've got that safety net.
They know they have that death benefit.
So they're not just like hoarding their money.
No, they're living their life.
They're living their best life, yeah.
Exactly.
What about the poverty couple?
So they take this more conservative approach.
Okay.
And they end up with a larger inheritance.
Okay.
But they don't get to enjoy it.
Wow.
They miss out on a lot of experiences.
That's a powerful illustration.
Right. It's about balance.
Between security and actually, like enjoying life.
That's right.
It's about living, not just surviving.
That's what it's all about.
So phase 1, you plant the seed. Phase 2, you leverage that cash value, start using it, making it work for you. Phase 3, Spending down other assets strategically.
Yeah.
Okay, what's phase 4?
This is where it gets really interesting. Phase 4 is using the death benefit while living.
Wait, hold on.
Yeah.
Using the death benefit while you're still alive?
Yes.
I thought the whole point was to, like, take care of people.
I know.
After you're gone.
So traditionally, that was the purpose of life insurance.
Okay.
But this book challenges that.
Okay.
And they give 7 strategies for accessing the value of your death benefit while you're still here.
7 strategies.
Yes.
Okay, you're going to have to tell me more about this.
Oh,
because that sounds pretty incredible.
Yeah, so one strategy is called the spend down.
The spend down. Okay.
And that's similar to what we talked about in phase 3, where you're spending down your other assets.
Right.
Because you have that safety net of the death benefit.
So you're not afraid to use your money.
Right, you get to enjoy it.
You get to actually enjoy it.
That's right.
While you're alive.
Yeah.
I like that. Okay, what else? What are some of the other strategies?
Well, the book also talks about using a reverse mortgage with your life insurance.
Oh, wow.
So you increase your cash flow during retirement.
Okay.
But you know that the death benefit can be used to pay off that mortgage later.
Oh, that's smart.
Yeah. So it's about utilizing all the tools.
Using all the tools.
To craft your retirement plan.
To craft a retirement plan that actually works for you.
That's right.
Okay. What are some of the other strategies in that list of 7?
Well, you can take your dividends out in cash.
Oh, right. Yeah.
Supplement your income.
To, like, live on. Yeah.
Right. You can maximize your pension benefits.
Okay.
And there's even this strategy called a life settlement, where you can sell your policy.
Wow.
Later in life to get a lump sum.
So there's a lot of flexibility there.
A lot of flexibility.
So kind of like
tailor it to your situation.
Tailor it to your situation.
Right.
That makes sense. Okay. Anything else on that list?
Yeah. There's charitable remainder trusts.
Okay.
Where you donate a portion of your policy's death benefit to a charity.
That's awesome.
But you still receive income from it.
Oh, wow. So you're like leaving a legacy, but you're also...
You're giving back.
Giving back.
And you're still benefiting.
So it's like win-win-win.
It is.
Okay. So phase 1, we planted the seed. Phase 2, we started leveraging that cash value. Phase 3, spending down assets. Phase 4, using that death benefit while you're alive.
Right.
Now we're on phase 5. What is that all about?
Phase 5 is all about legacy. That's setting up the family bank.
Setting up the family bank. Okay. Now you got to break that down for me because that sounds really cool.
Okay. So it's about using your whole life policy to empower future generations.
Okay.
So think of it like you're passing down financial knowledge.
Not just money.
Not just money. It's a mindset.
A mindset.
Yeah. A legacy of abundance.
It's like you're breaking that cycle of financial struggle.
Right.
And you're setting your family up for success.
Exactly. It's creating a ripple effect.
A ripple effect. I love that.
Yeah.
All right. So this has been a lot to take in, and I'm sure our listeners are like, whoa, this is a lot of information.
Yeah.
But before we wrap up,
I
want to make sure we're all on the same page about some of the key terms we've been using.
Of course.
Because I know when you're talking about life insurance,
right,
there's a lot of jargon.
There is.
And it can be really confusing.
Yeah.
So the book has a glossary, which is awesome.
It does. Very helpful.
Breaks it all down for you.
Yes. Plain English.
So let's just go over a few of those key terms.
Sure.
Especially the ones that relate to like...
Yeah, control, liquidity.
Control, liquidity, financial independence.
Okay.
Because I think that's what's so important for folks, especially in our area.
Absolutely.
You know, who are trying to build a better future.
That's
for themselves and for their families.
So let's start with cash value. So cash value, it's like the heart of that CLUE method.
Okay.
It's basically like a savings account that's inside of your policy.
Okay.
But it has a few extra benefits.
Okay. Like what?
It grows at a steady rate, and it's guaranteed by the insurance company.
So you don't have to worry about the stock market crashing.
Exactly. It's safe and secure.
Okay. I like that.
Yeah.
What about dividends? I hear that term a lot, but I don't really know what it means.
Okay. So dividends are like a bonus you get just for having the policy.
Okay.
It's a share of the insurance company's profits.
Oh, wow. So it's like your money's making money.
Exactly.
On top of the guaranteed growth.
That's right.
What can you do with those dividends?
You can take them out in cash if you want.
Oh, okay.
Which can be really helpful, especially during retirement.
Yeah. A little extra income.
Exactly. Or you can use them to buy more coverage within your policy.
Oh, so you can like customize it.
Right.
To meet your specific needs.
Exactly. You can increase your death benefit or your cash value. You have options.
I like options. Now, what about paid-up additions? What are those?
Paid-up additions are like mini insurance policies inside your main policy.
Okay.
And you can use those dividends to buy them.
Okay. And
they add to your death benefit and your cash value.
So it's kind of like a way to Like
boost your policy.
Boost, yeah, supercharge it.
Exactly.
All right. Now, another term I see a lot is opportunity cost. What does that mean?
So opportunity cost is basically the cost of choosing one thing over another. So like every financial decision you make, there's an opportunity cost.
So for example, if I put my money in the stock market,
right,
instead of into my life insurance policy, the opportunity cost is all that guaranteed growth and those benefits that come with the policy.
That's a great example.
Okay, so this has been a lot of information. Thank you so much for breaking it down for us. Live Your Life Insurance, really a fascinating read. It's given me a whole new perspective on life insurance and its potential.
It really challenges the way we think about it.
It does.
It's not just about what happens when you die.
Right. It's about living.
It's about building a better future.
Yeah, building a better future while you're alive. So for our listeners in Deer Park, LaPorte, and Pasadena, what's the one thing you want them to take away from this deep dive?
I want them to remember that whole life insurance can be a powerful tool for financial freedom.
Yeah.
It's not just a safety net. It's a way to build wealth, create opportunity.
And leave a legacy.
And leave a legacy for your family.
It's about taking control of your financial destiny and creating a future where you can thrive. And if you want to support our mission of empowering our community, you can donate at thinkandactlocally.com/donate. You can find a link in the show notes.
Thanks for joining us for this deep dive into Live Your Life Insurance.